Ben, many thanks for joining us today. You've recently announced your H1 results, quickly followed by a £30 million fundraise to support the acquisition of Codewise. But to put all of that into context, could you just start by detailing the key highlights of your first half results?
Well, first of all, our year-on-year revenue was up 124% to $111 million, which happily means we did more revenue in the first half of this year than the full year last year. Adjusted EBITDA was up to $15.1 million versus $9 million last year, and our cash balance was also up about $10 million to $27.6 million. Our net debt was clearly much higher this year as we issued roughly $100 million worth of bonds in the second half of last year, but net debt's at $76 million for the first half. And because we're a highly cash generative company, that net debt will trend down during the year. The way we did that really is happily because we view ourselves as a critical infrastructure business. We had excellent business continuity plans, moved everyone to working from home earlier than it was required anywhere, and have kept our workforce healthy, our operations all running smoothly. We've had no interruptions to supply chain or operations, and it's proven that demand for what we do has grown. In the meantime, we did do a restructure and move from a centralized structure to a divisional structure, appointing new managers to take P&L responsibility for each of our divisions, as well as building up a stronger central core of services for HR, IT, and finance and the like. We also performed the exercise of doing a pro forma to look at what it would have looked like in the first half of the year if we'd owned all the companies then, the first half of last year versus this year, in order to determine exactly what the organic growth rate of the business is. And that is 18% on a revenue basis year on year, and 16% on an adjusted EBITDA basis year on year. So clearly very happy with those numbers.
Can you talk specifically how the Team Internet business, which you recently acquired, performed over the period?
Absolutely. So Team Internet has been the star performer of our business since we acquired it on Christmas Eve last year. Its year-on-year growth has actually been 38% at the revenue level, which is unprecedented for that company and for any company we've owned. Clearly, they've proven extremely resilient to the COVID crisis, but also they did launch a new product at the end of last year called SSL monetisation, which is a way of making domain names that are monetized, which is what they do, pass through all of the SSL tests. In other words, for the browsers to mark them as trustworthy websites, which is clearly an important technical development, which we have patented and was not possible in the past. So between great demand and great new product, 38% has been excellent growth. The monetization, the Team Internet team is based in Munich, and it does run as a essentially standalone business, although obviously the board has changed with myself, our CFO, sitting on that board, ensuring that from a governance perspective and a strategy perspective, the companies are well integrated.
And moving on from that, you've recently announced and completed a £30 million fundraising to support the acquisition of Codewise. Can you discuss that acquisition and how that fits in with Team Internet?
So basically, Team Internet is the best company or the leading company in terms of market share in the domain name monetization industry, and they view the Codewise team as their biggest threat. So obviously, having them both under the same corporate umbrella is a great place to be. There's a couple of businesses within the Codewise group. Zeropark is a domain name monetization business. It uses a completely different technology from Team Internet. So whereas Team Internet, for a domain name that used to belong to a business and is still getting traffic, now in the hands of an investor, the Team Internet puts up a web page and puts ad slots on that and auctions it off. Whereas for Zeropark, it's called Zeropark because it's what's called zero-click technology. So instead, the advertiser simply buys the traffic. It goes straight to their website. It doesn't go through a page. No one has to click on ads. But they're both two different technical approaches to the same opportunity, and having both technologies makes us a hugely resilient and robust business moving forward. But Zeropark has another fantastic business, Volume Tracker, which is a tool for online marketers to manage all of their affiliate programs, their other spend online. A fantastic tool, which is a straight subscription business. So relatively fixed price. Subscribers pay between $70 and $1,000 a month, depending on the volume that they use. And it's a north of 50% gross margin business, and one that's growing healthily as well.
Great. Looking at the two businesses, Team Internet and Codewise, they are obviously competitors. Can you talk about the synergies and the integration plan between those two businesses?
Absolutely. So they're based in Krakow in Poland, and like Team Internet, they'll continue. We're taking all the staff, and they will continue to run as they do with the change in board. So I'll be becoming the chairman there. And we got PwC and Solon to do the due diligence on this business, and they identified $1 million of integration benefits that they could identify as relatively low-hanging fruit. There's a couple of areas, not only cross-selling opportunities between our monetization businesses, but also between Zeropark and our other businesses as well. So we're going to be putting all the management together to solidify those plans very shortly. Secondly, there's clearly savings to be made in marketing expenditure as we redirect marketing away from trying to take customers away from these two businesses, from each of them, and instead focus on continuing to grow our market share. And clearly we can make savings on things like booths at trade fairs and so on, that rather than two, we can have one. Secondly, we've identified good savings potentially in hosting, because we'll have greater buying power and therefore be able to buy at a cheaper rate for hosting across the group. And then lastly, we will be putting the tech teams together to have a look at, are there ways that they can run the various platforms more efficiently, working together, taking learnings from one and applying them to the other, and potentially migrating customers between them in order to have a much more efficient and streamlined technologies moving forward. Just to add, I think the deal is 20% plus earnings accretive on an earnings per share basis from the time we complete, which will be into next month, and that doesn't include these integration costs, which will be additional integration benefits that will be further accretive to that.
Looking at the shape of the overall group, obviously that's transformed a lot over the past year with organic growth, but obviously the acquisition of Team Internet, and you've got this acquisition on top now. Can you just describe, I guess, the profile of the group now once the acquisition completes?
So the historical foundation of the group is domain names. We have a fully integrated stack of platforms in the domain name industry where we serve each of the different client or customer groups. So first of all, governments and other entities that run domain names. So these are domain names for country codes, for instance. Secondly, wholesalers of domain names that are connected to all of the suppliers globally, and then through a single API are able to provide those domain names to retailers all over the world through one single connection, one invoice, one customer service number to call. Then as a retailer, we're a fairly niche player specializing in selling country code domain names and in servicing domain name investors who tend to acquire large portfolios of domain names. We have an enterprise business that looks after the domain name portfolios of some of the largest companies in the world. And then as well as those domain names, the area we're truly branching out into now is the other software and services that is very closely aligned to domain names. So clearly monetization, a very, very important service for the domain name investors. But secondly, online marketing, obviously a very important tool for businesses small and large that once they get their domain name and website, have budget and wish to drive more traffic and acquire more customers through those websites. And then lastly, we're just dipping our toe in other software and services around domain names for some of the other audiences. So for instance, selling Microsoft Office 365 subscriptions to small businesses, selling Amazon web hosting to businesses wishing to host their websites via us. And lastly, looking at online brand protection services for enterprise. So we see, firstly, our footprint growing larger and larger. We already have 13% of all domain names in existence touching one of our platforms. We want that number to grow. And then secondly, on top of the domain names, we're adding these additional products and services. The great thing about this is we can do all the distribution through our internal supply chain that we've bought and built. And secondly, these are all recurring revenue businesses with the same 100% cash conversion profile, which is what our company looks like today and what it will continue to look like as we grow.